Hello everyone. Today we're going to analyze value of US dollar and its trend. Let's jump right in. So let's try to understand the value of US dollar. Before 1971 it was pretty straightforward. You could convert your US dollars in a fixed amount of gold defined by the US government. After August 1971, US dollar became fiat currency. It means it's no longer backed by gold, and the value of fiat currency is quite arbitrary. It means multiple factors define what US dollar costs, if in fact it is not backed by anything but the people's confidence in US dollar. So let's go through some of those factors. So first of all, US dollar index, also called DXY. In finances is used as a common valuation for US dollar. What it represented by? It's represented by US dollar value against other currency. You can see those currencies on the screen. Euro, Japanese yen, Canadian dollar, Swedish krona, Swiss franc, British pound. So let's look now in the DXY index. It went pretty low in 1990s, then it went way up during the dot-com stock bubble. Then it fell again during the global financial crisis, before and after. And at this point it remains pretty stable at the level of 90. So if I try to compare S&P 500 with the dollar index and try to find some correlation, I can see that US dollar went way up during the dot-com stock bubble, but it does not correlate during the global financial crisis where US dollar went down. At the same time, stocks before the global financial crisis went way up. And the same I can tell about the recent period. You can see that current stock market level in US is way up, but US dollar is more or less on the average level. So there must be something else which drives US dollar. Even though I can tell that when people buy stocks priced in US dollar, obviously there's more demand for US dollar and it should drive US dollar up. So which other factors, and those factors might be much higher and much more important in value in US dollar. One of those main factors which economists use when valuing US dollar is the current US trade deficit as a percentage of GDP. The current level is minus 3%. It means the US current trade deficit represents negative 300 points to GDP. And as I mentioned in my previous videos, that current GDP of United States represented 50% by government spending. This number might be even higher if you compare it to the real economy. Even more interesting chart, if you combine trade deficit with the federal budget deficit and compare it to the US dollar index, you can almost see the correlation between the US dollar price and those so-called twin deficits. If you look at this chart, you should expect that US dollar should go significantly down if US trade deficits and budget deficits will continue to follow this negative trend. So just to summarize, we looked at the stock market because stock market for US stocks creates demand for US dollar. Of course, there are many other factors like oil is priced in US dollars. There are foreign stocks which price in US dollars, so-called American depository receipts. There are multiple reserves and transactions between other countries which are executed in US dollars. So US dollar is the reserve currency of the world, and it obviously gives it additional value as a medium of exchange, not only within the United States, but around the world. And as we keep looking deeper into this whole system, you can also see from my previous videos where I analyzed if the current stock market level in US has a valid reasons to be that high or it's a bubble. And if we think about the political landscape in US, and if US continues to run those trade deficits, budget deficits, combined with a major crash in the stock market, might kill the US dollar. So considering all those risks, let's look into what might be a valid hedge against US dollar losing its purchasing power. The most obvious historic hedge against falling US dollar are commodities. You can see on the chart that commodities has inverse correlation to US dollar. And one of commodities which is particularly affected by the falling US dollar is gold. Again, it's almost perfect inverse correlation US dollar against the gold value. So in the conclusion, if you believe that we are for a significant US stock market correction and that US government will continue run those trade and balance deficits, you need to be prepared to protect your wealth, let alone gain it. Thanks for watching. I will post link to my other videos in the description and see you in the next one. Bye bye.